Good day, ladies and gentlemen. Welcome back to another edition of the Red Folder Strategy journaling videos. Today is not a Red Folder day, so I'm not going to talk about the Red Folder strategy, but I would like to, take you guys through the video that I've obviously put out yesterday. And I've also put out a video explaining the Red Folder strategy and what I'm looking for from an entry perspective. So what I want to do is I just want to play you from my market review a piece, and then I'm going to break down how that entry played out perfectly today. So let's play this video quickly, and then I'm going to obviously take you guys right to the actual live chart. But it's always good to see on a higher time frame where specific levels are that's going to be important on a day, and I'll show you what's important for me here and the reason why. This big candle up here, it would be great to see price go into that 50%. That is that 50% CE that I'm talking about. This is on a weekly, this red line up here, but this is on a 4-hourly. And you'll see we've got this spike here, the spike there. That's equal highs to me. That's liquidity to take those equal highs out into that 50 and then come down to all of this liquidity down here. It's a low, higher low, higher low, and now we can see something move down here. And that basically brings us back to the live chart, which I will take you guys through quickly. So if you listen to that video, you'll see we spoke about these equal highs up here, that 50%, a price to spike in it to run those equal highs and then see some sort of a sell-off. And what do you do with this? I mean, how do you trade these things? If you know you've got important levels, so this is important levels, that 50%, so that whole section there is important. That means I'm expecting price to run liquidity into a 50% or in this, this CE level, and then see some sort of reaction from that. And if you take that on a 1-minute chart, which we're going to go through now, you'll see how it actually plays out, and you could have, banked some good profits today. Let me jump into a 1-minute chart quickly and leave all those lines on there so you guys can see. Let's make this bigger. All right, so that H4 50% CE, that's the level we've marked out. This is those equal highs. I mean, there was equal highs here, and down here. So all the way from down here, I was reading price action all the way up and taking all these levels. So what I said in my video as well, when you look at my Red Folder video, which I will link into the description below so you can go and watch it. Whenever you've got an area or liquidity, not just an area, an area of interest with liquidity, we know above this red line, there's liquidity there. So I want to see price run up into it and reject it. But the reason I did not take this fair value gap or this inverted fair value gap here is because I know there's this 50% right above it. So I want to see price run into that and then reject. So this one would have failed if you just randomly took it, but you didn't have any specific levels. So I've marked out this level, and we inverted this fair value gap on this candle here. So you could have just taken the trade from there because, or waited for it to test it. I did not take this trade here because I missed this trade, this whole setup here. When I came to the chart, we were already on the second black candle, and I didn't want to just jump into it. So my eye goes back to these 3 black candles down. That to me is an order block or breaker, or in this case, I'll just call it the order block. So I want to see price, go below it and then go test it. Then that's an entry on its own. So I'm not going to go into the detail there. But be as it may, I wanted to show you guys that if you've got a level that's of interest with liquidity linked to it, and you get an aggressive move out and aggressive move back down, inverting fair value gap, that is a good setup. And then where did I take it to? I only took it down to this fair value gap that got inverted down here. And I'll make a separate video to this, but there's something significant about that first fair value gap that forms after 9:30 in the morning. That's an ICT concept that's been taught. So I don't know why it forms, why it's so important, but it is important. If you go back test it, you'll see price either use it as resistance or support, or it's a liquidity, not liquidity, but it's a magnet to draw price to. So in my case, I looked for shorts up here and I took my profits down here. Now you can see, and you might tell me, listen, but you talking about liquidity even lower down. I know there's liquidity lower down, and I'll show you where the liquidity now is, where if I had to take a trade, which I'm not going to do, but there's your equal lows. Call it lows. Okay, there's equal lows right there. So that is a place I think price could draw to, especially now that we've run liquidity, all this liquidity up here. We came into a important level that we outlined earlier, and we're selling off, and we could use this fair value gap to see if it wants to form some sort of rejection off here to actually go lower down, because this is the range with equal lows right below it. So anything up here is going to be a premium zone, and could be, and I'm not saying, guys, this is not financial advice at all. I'm not telling you guys to short up here. I'm just saying this could be a catalyst for price to move into this area and then form some sort of a reversal to go down to target these lows. I think these lows is most probably going to be the target for later today. And if it's not going to be, then we might want to go higher into this red line up here. But the message from this video that I'm making here now is it's important to mark out levels, which I've actually indicated to you guys yesterday, that there's potential opportunity up here. I don't know it was going to play out today. It could have played out on Thursday when our Redfield event took place, but this played out today. It was there, the setup, the way I explained the setup, the fair value gap that runs liquidity into an area and get inverted almost immediately or aggressively. That gives you the setup, or high probability setup, to go lower. The minute you cross this swing low, the first swing low, you can move your stop to break even and let it run to the next target. And there was lots to target down here, all these lows down here, but be as it may, that created a nice equal lows now, and we might see something from this big fair value gap here to push lower and to run these equal lows down here. It's all up to the market. I'm just telling you what I'm seeing, and my mind can obviously change depending on price if I stop this video and I see something else. But at this point, we add a very key fair value gap or inverted fair value gap, and this fair value gap, inverted fair value gap, can be used for multiple, here it was support, there was inverted resistance and push price lower, now it's inverting it, now it's finding some sort of support. I don't know if it's going to run up and then down again. So, and that's not what I'm trading. I'm not trading this fair value gap. I'm using this IFEG for indication where price might go or where price might come back to. So that is all that I have for you guys now. I just wanted to share this with you. Go check out your charts and see if you guys can see this. Mark it out, journal it, make some notes and save it somewhere. I know this video is going to be there, but it's always good for you to do your own journaling and keep learning from that. And yeah, so let's see what this does. Maybe this, price runs down, maybe it doesn't. This is also not a time to trade because you in this lunch hour from 12 to 1, price can go sideways, and maybe after 1 or 2 decide to go lower later this afternoon. So, and that's basically it. If you find any value through this videos or this particular video, drop a comment below, like and share it. Let me know your thoughts, and if you've taken the trade, let me know. I know I said not to trade any other days, but if you paper trade to learn, to obviously teach yourself the skill, and you saw this entry, let me know, and let's learn together. And yeah, until I speak to you guys next time, have a great day and be safe. Bye bye.